So hello everyone. Today's topic is fair value gap. Now we have two types of not two types but two types of price action. We see this one here and we also see this one here, which is the unhealthy price action and the healthy price action. Now many of us are struggling with understanding how a fair value gap is. Now some people do call this efficiency imbalance and inefficiency imbalance, but also it's almost the same thing. I think we have three types of imbalance, but this is the major one that many people put their attention on. Now for a fair value gap, you need three candles. You need three candles to indicate a fair value gap. Now you have to count it here: one, two, three candles involved. Now you look at the low of the candle. The low of the first candle, is it connected to the high of the third candle? If it's not connected, that is a fair value gap. I'll repeat again. You look at the low of the first candle and the high of the third candle. In between it, that is your fair value gap. Now, if you come in here for the healthy price action, you can notice that the low of the first candle, count the candle 1, 2, 3. The low of the first candle is connected to the high of the third candle. There is no fair value gap here. If you count this candle 1, 2, 3, if you put your line in here, the low of this candle, the first candle, is connected to the high of the third candle. There is no fair value gap in here. So there's no order for market to come in and fill in this direction. But if you look on your left hand side, we have orders that market has to come and fill in, which is the fair value gap. It doesn't matter the color of the candle. It can be the buy candle, it can be the sell candle. As long as there is a three candle involved sequence and you see the low of the first candle is not connected to the high of the third candle, then that's the fair value gap. For those that are using the top down analysis video that I did as a guide, that's your PD array. I will do a video specially for PD array. Institutional reference point, that's the premium and discount arrangement, that's the full name actually. But those that use institutional reference points, you can see here our fair value gap, order block. I've done a video on order block, mitigation block, breaker block, which I've done videos on this already. What I'll do more in the future is liquidity void, old highs and old lows, rejection block. Before I forget, on my channel, which is OK Forex Guide, do not forget to subscribe on my channel. I did a playlist especially for beginners that are struggling to learn how to trade I.C.T / smart money strategy. I focus my attention more on beginners videos just to help you, those that are learning how to trade. You can actually know how to trade easy and peasy like pizza, in a very nice way for you to get the whole trend on how to trade. So this is how you actually follow the institutional reference point. So I'm going to take you to the chart now. On the chart here, let me delete everything I've done here. You can see we have a fair value gap here. We count the candle 1, 2, 3. We put a low here. The low of the third candle and the high of the first candle is not connected. You can see it here. Make it more clearer for you to see. And you can see market is reacting there and what? Pushing up. That is your fair value gap. This is your fair value gap. Now if you go around the chart there, you can either use it as your point of entry or you can use it as your take profits. Always take note, you can use it as your point of entry or you can use it as your take profit. This is a liquidity void. Let's look for a fair value gap. You can see a fair value gap is here, but this is a liquidity void, impulse move. But I'm going to do a video on that for you in the future. Now you can see here, okay, I don't like that fair value gap I'm seeing. I want to show you a fair value gap in a way that you understand it. Now you can see here, this is the high of the first candle. 1, 2, 3. This is the high of the first candle. You can see it here, right? The high of the first candle, and this is the low of the third candle. Did they connect? No. That is your fair value gap. Just come in here and label it FVG when you're analyzing your chart. using the institutional reference point as your form of analysis. You can go around the whole chart, just practice it. You can come here, you will see it. Count the candle 1, 2, 3. You put a line there. This will make your chart easy for you. And the third candle, you put your line there. That is the high of the first candle and the low of the third candle. Do they connect? Question: no. You put your sign there to indicate a fair value gap is there, and that is order. And market usually comes there and reacts. Market always comes there and reacts. It can be used as a form of take profits, or it can be used as a form of your entry also in a trade. So do not forget also to subscribe on my channel. Okay, Forex is a very new channel that is growing, helping new traders that do not have coach actually to coach them, or a mentor to guide them on how the I.C.T or SMC trend strategy or method do work, how to those minor things in the chart they are finding very difficult to understand. I'll try my best to make it as simple and more easy for you to understand. Thank you very much.